Hi everyone. Today we're doing 8.2 income tax. So we're going to be calculating income tax today, and this involves many steps and lots of percentages, so make sure that you're paying close attention. First definition, gross income. This is your total income for the year. So this is things like salary, wages, and any interest earned on your bank accounts. So to calculate income tax, first we have to determine the adjusted gross income. So adjusted gross income, this is taking your gross income, the salary and wages and interest earned we just talked about, and subtracting out adjustments. Now adjustments, this is anything that is taken out pre-tax. So some examples of adjustments made to a person's gross income will be payments to a tax-deferred savings plan, medical pre-tax accounts, and dependent care pre-tax accounts. Our next step is to determine the taxable income. So taxable income, this is where you take your adjusted gross income minus any exemptions and deductions. And so that means anything post-tax. So you get an exemption amount for yourself and usually for each dependent you claim. This amount changes each year. In the table below, we're going to be using the 2008 example. That's what the textbook uses, and that amount was $3,500 per person. Deductions will be the greater of either the standard deduction or an itemized deduction. The standard deduction changes each year and depends on your filing status. In the table below for 2012, the standard deduction for someone filing as single was $5,950. Itemized deductions include interest on home mortgage, state income taxes, property taxes, charitable contributions, and medical expenses exceeding 7.5% of the adjusted gross income. So here's our example. We're going to calculate the federal income tax. So to determine the income tax, we're going to take our tax computation, which we'll go through in a moment, minus any tax credits. So the tax computation depends on your taxable income and your filing status. The biggest mistake people make is that they tax all of their income at the highest percent. The rates in the table are marginal rates, or rates assigned to various income ranges. When you hear that someone is in the 25% tax bracket, that just means that the part of their income over a certain amount is taxed at 25%. It is not their entire income that is taxed at 25%. Tax credits change every year. Some typical credits are a fixed amount for each child, child care credits, adoption credits, energy efficient credits, education credits, first-time home buyer credits, etc. Okay, so we're going to use this 2012 marginal tax rate to calculate the income tax owed for the following individual given the following information. Okay, so this person's filing status, we see that they are an unmarried head of household with one dependent. Now the gross income is $65,000. I'm going to underline that. Our adjustments, we can see that we have $5,000 dependent care pre-tax account. The deductions that this person's taking, we have $3,600 for state taxes, $800 for charitable contributions, and $2,000 for medical expenses. So if we total this up, that is $6,400. And we see we have tax credits of $2,000. Okay, so we need to determine the adjusted gross income. So remember, adjusted gross income, that is your gross income minus any adjustments. So our adjusted gross income again, this is going to be our gross income, which we can see is $65,000 minus any adjustments. And we can see the adjustment we have here is the $5,000 dependent care pre-tax account. So we can see this is going to give us $60,000. Okay, so now to determine the taxable income, we're going to take our adjusted gross income that we just calculated minus any exemptions and minus any deductions. So our taxable income again, we have our adjusted gross income, which we just calculated at $60,000 minus any exemptions. So if I look in our table here, we can see we have an exemption per person right here. That's $3,800. So for this case, we have an unmarried head of household with one dependent. So again, this is for our head of household and the dependent. So we're going to take that amount and do 2 times the 3,800 because again, it's for the head of household and the dependent minus any deductions. Now remember, for the deductions, this is the higher of the itemized or the standard deduction, but it's not both. Okay? In this case, we can see that when we calculated our itemized deductions, that was $6,400. We see here in the chart, the standard deduction is $8,700. So $8,700 is the higher amount. Again, you want to use the higher amount because that means that the government can tax you less. You want to subtract out the higher amount. So we're going to subtract out $8,700 here. So to get our taxable income, we have $60,000 minus our 2 times 3,800 is $7,600 minus that standard deduction, $8,700. And so this makes our taxable income $43,700. So our last step now is we have to determine the income tax. So our income tax is our tax computation minus any tax credits. So if we look in our chart, our taxable income is $43,700, right? So I'm going to write this here. Our total was $43,700. So if I look above here, $43,700 falls here within the 15% range. So we would say this person is in the 15% tax bracket. So we're going to split this up. If you notice, the 10% tax rate goes up to $12,400. So this person's first $12,400 is going to fall in the 10% tax bracket. And then everything from that 12,401 up to their 43,700 will go in the 15% bracket. So this is how you'll write this out. We're going to split this person's income. Again, the total is going to be 43,700. We know that the first 12,400 is going to go in the 10% tax bracket. And then to figure the amount that's in the 15,000, I take 43,700, our total, minus 12,400, and that leaves us with 31,300. Again, those two parts should add up to our total taxable income. Okay, so this is how we find the tax computation. I'm going to do 10%, so 0.1 times 12,400, and that gives us $1,240. Then we do the 15%, so 0.15 times 31,300, and that gives us 4,695. So these two amounts together, this is our tax computation. $1,240 plus $4,695 equals $5,935. So our income tax, that tax computation, are $5,935 minus any tax credits. If you recall from above, our tax credits are $2,000. So we subtract that and we get our income tax is $3,935. Okay. Next, we're going to be looking at FICA taxes. So FICA, this is the Federal Insurance Contributions Act. They're used for Social Security and Medicare benefits and health care for people over 65. Social Security, this provides payments to eligible retirees, people with health problems, eligible dependents of deceased persons, and disabled citizens. So here's the tax rate chart. So this one says if you are not self-employed and earn $200,000, what are your FICA taxes? So we're going to use our table above. So we're going to split the $200,000 kind of like we did on the tax calculation in the previous problem. So we are not self-employed, which means we're using these employee rates here. So notice it says 5.65 on the first 110,000 of income and 1.45% of income in excess of 110,000. So we're going to draw our bar diagram to split this up. Again, the total is going to be 200,000. So the first 110,000 is taxed at 5.65%. And then in this case, 200,000 minus 110,000, that next 90,000 is going to be taxed at 1.45%. I would like you to do the tax calculation for this one, similar to what we just did, to find the total amount for the FICA taxes. Okay, so 5.65%, that's going to be 0.0565 times our 110,000, which gives us $6,215. At the 1.45% rate, that's 0.0145 times the 90,000, which gives us 1,305. We add these up, and the total amount taken out for FICA taxes is $7,520. All right, two more definitions for us. Your gross pay, this is your salary prior to any withheld taxes for the pay period the check covers. And then your net pay is the actual amount of your check after tax have been withheld. So here's an example of a pay stub. So if any of you work, you might have a pay stub that looks similar, where you'll see things like federal taxes, FICA taxes, and state taxes taken out. So pay stubs are attached to your paycheck and usually contain 4 sections. There's personal information about the employee, so that's like your address that's listed. Information about earnings, such as your hourly wage, the number of hours on your current pay period, and the number of hours worked year to date. Information about tax deductions, summary of current withholdings for that pay period, as well as withholdings year to date. And then your gross pay, total deductions, and net pay for the current period, and the year-to-date total for each. So you decide to work part-time at a local nursery. The job pays $12 per hour, and you work 15 hours per week. Your employer withholds 10% of your gross pay for federal taxes, 5.65% for FICA taxes, and 4% for state taxes. So that chart above is just an example of a paycheck. We're going to be using the numbers from this problem to calculate each of these questions below. So again, important pieces of information. We see our job pays $12 per hour, and you work 15 hours per week. So in order to determine our weekly gross pay, we can use that information. So your gross pay, you're just taking the $12 per hour times the fact that you worked 15 hours, and your total is going to be $180. Next, it says how much is withheld per week for federal taxes. It says your employer withholds 10% of your gross pay for federal taxes. So please calculate how much is withheld for federal taxes. So federal taxes is 10%. So we do 0.1 times the $180 gross pay, which gives us $18. Next, we're asked how much is withheld per week for FICA taxes. So it says 5.65 for FICA taxes. So I would like you to please calculate this part. So FICA is 5.65%. So we're going to do 0.0565 times our gross pay, the $180, and that's going to be $10.17. Next, we're asked how much is withheld per week for state taxes. Again, it says 4% for state taxes, so please calculate this one. So for state, it's 4%, so we're doing 0.04 times the $180 gross pay, and that gives us $7.20. So now we need to find our weekly net pay. So your net pay is going to be your gross pay minus the amount withheld for federal tax, minus the amount withheld for FICA, minus the part that's withheld for the state tax. So we have $180 minus 18 minus $10.17 minus $7.20. And so our net pay will total $144.63. The last question for today is, what percentage of your gross pay is withheld for taxes? Round to the nearest tenth of a percent. I would like you to do this now, please. So our taxes are each of these amounts, right? The federal, FICA, and state. If I add that together, the taxes that are withheld is $35.37. And we want to know what percentage of the gross pay this is. Remember, the gross pay is $180. So if I divide this, we get 0.1965. So to the nearest tenth of a percent, this is going to give us, if we went to the nearest hundredth, because this is 4 places, it's 19.65%. Or to the nearest tenth, it's 19.7%. And that's all we have for today.